The legendary investor Warren Buffett once said, "The more you learn, the more you earn." Investing is a journey marred with mistakes, highs, lows, sometimes very deep lows, and best of all, investing is a journey of learning. Great investors can never predict what will happen tomorrow. Nobody really can, but with time and knowledge, they build up an arsenal of options with different possibilities, strategies, and tools available to minimize risk while positioning themselves for huge upside. The best investors are learners, not finance experts. Here are 9 secrets that great investors have learned that have made them very wealthy. And if you like this content and want to be wealthy too, make sure you smash that like button so you'll keep learning from our channel for the price of one click of that like button. And if you stick around to the end of this video, we'll show you how it's even easier to get this free shirt. Secret number 1, recessions are normal, so be prepared for it. Recently, there's been a lot of speculation in financial markets about a recession. But the truth is, recessions occur every 5 to 7 years, and people are acting as though recessions come in a blue moon, and finally somehow we've arrived because the US government has created trillions of dollars out of thin air. Nothing can stop recessions forever, according to history. Another 2008 financial crisis will happen. It will hurt people who are not prepared. So what can you do when you know another recession is just around the corner? First, don't panic. Second, expect chaos. Don't ever put yourself in a position where you have to sell when it's the worst time to sell. Number 2, cash is still king. Now before you click off this video because you believe cash is trash given the inflation rate, let me explain. One of the easiest ways to prepare for a big downturn in a recession is to have at least 3 to 6 months in emergency savings so you don't have to sell your investments. Or better yet, have enough cash to capitalize on big dips in the market. Volatility and big dips in the market are actually great buying opportunities, and that's something every great investor knows. Some people have an opposing view, believing that cash is trash. And yes, while holding cash is losing money, given the growing inflation rate, cash, as we'll see later, buys opportunity. Even Warren Buffett holds cash, and a lot of it. $144 billion of it. That's over 20% of the total value of his $700 billion company. Number 3, margin is risky but extremely powerful. If you don't want to stay in a lot of cash, have a margin account. Margin allows you to borrow money to buy securities if you really need it. One brokerage, Interactive Brokers, allows you to borrow margin at a super low rate of 1.59%. Now with margin, one thing you need to know is you could lose money and owe money. So make sure you know what you're doing when you use margin. Number 4, money buys you opportunity. It's hard to deny that money is useful. It helps you pay the bills, it helps you buy a house, it helps you buy a Tesla. But beyond what the tangible things it buys, it also buys opportunity. Opportunity is not equal for every person. Take for example education. Money can buy you education. Education can help you earn more money. But what money also buys you is the opportunity to invest when there's a recession. It allows you to buy stocks of great companies when they're very cheap. Number 5, money buys you time. It's true, money can't always buy happiness. Some of the most depressed people are the ones with a lot of money, while some of the happiest people in the world have almost nothing. However, what money can buy, aside from a Lamborghini, a house, a lot of nice things, and so on and so forth, is time. Money buys you time so you can choose not to sit behind a desk and work 10 hours a day if they're not paying you enough. But aside from the transactional value of time versus money, money also literally buys you time, and time makes you wealthy. Here's how it works. Number 6, time makes you wealthy. As Warren Buffett also once said, time in the market beats timing the market every time. Generally speaking, so long as you're not YOLOing your money buying weed stocks, your wealth will grow with more time in the market. So how do you stay invested in an ever-changing world when inflation is going out the wazoo, price for a gallon of oil is going higher and higher, and your kids are costing more and more? Well, if you're not rolling in cash from your grandparents' inheritance or your rich dad hasn't yet given you $1 million, it's okay. Did you know that you can borrow money off of your stocks? It's true, and it's what every rich person does. Instead of selling their stocks to pay for their $1,000 tuna tartare meal, they simply borrow off of their securities. Sure, they pay a measly 1.59% interest, but with a historical average annual return in the stock market of 10%, that interest is really dwarfed by their fat gains every year. And that is just one reason why the rich only gets richer. Do you want to go to an ATM and be able to borrow and withdraw from your stocks? Open up an Interactive Brokers account with the link below where you can get up to $1,000 in free stock, and you can also play the game of the rich. Number 7, fight inflation with assets. Inflation this past year hit an astounding 7.5%. The problem of rising prices caused by inflation and the devaluation of US dollars can only be defeated by the following. Investing in assets that outpace inflation. The only way you can beat inflation is investing in assets. If you can't afford to buy a house because everyone is bidding 20% over market value and willing to pay cash, that's okay. You can still buy crypto. I'm just kidding. But really, you can invest in REITs, which stand for Real Estate Investment Trusts, that also pay great dividends. Or better yet, you can trade options, which essentially is a leverage on stocks. Check out our video in the link below on how you can retire with $110,000 safely, which is relative, trading options. Number 8, assets buy you freedom. Investing really isn't just about getting rich. If you remember what I said earlier, money buys us time. Ultimately, we want to make money from investing so we can buy back our time. The process of reaching this level of freedom doesn't happen overnight. Investing works in the long term and can be devastating if you only do it short term. If you've been on the journey in investing and learning long enough, one day it gets you to a point where the income of a job really isn't as important anymore. And at that point, you can work less hours and have the freedom to do whatever you want with your time. You can spend time with loved ones, travel the world, or start another side business. Time is designed to be spent however you want. Then one day, it runs out and the party is all of a sudden over. And that's why you shouldn't ever waste a single minute of your time. Number 9, we're shaped by what we learn. Information, social media, speculation, and even bots. Let's be honest, much of our lives are shaped by social media. From how we see the world, what we believe is important, to even how and what we invest in. Anybody who says social media doesn't influence them is lying. A lot of crypto and even stocks are pumped with speculation, social media, influencers, and sometimes even bots. Pumping up a stock or even a fake coin is really as easy as a group of people sending an army of bots out to artificially inflate the number of comments and shares on social media. The bottom line is don't fall for investment hype. Do your own research, and most importantly, keep learning. Because as Warren Buffett once said, the more you learn, the more you earn. If you like this video, make sure you hit that like button, subscribe, and comment below with your favorite secret or idea that investors have learned. Every month we'll pick one random person from the comments to give away this free shirt. Thanks for watching, guys, and we'll see you around in the next video.
With every star